Today on Seat 11A, we are joined by Robert von Wülfing, CEO of Amadeus Fire Group, to present the company's full year 2025 financial results and provide an outlook for 2026. Following a challenging year marked by weak economic conditions in Germany, lower demand in both personnel services and training, and continued market uncertainty, the company remained focused on efficiency, restructuring, and strategic investments in digital growth areas. We are pleased to have him here today. Robert, the floor is yours.
Hello, everybody. My name is Robert von Wülfing. I'm the CEO of Amadeus Fire Group, and it's a pleasure to present today the financial statements and figures 25 and give some 26 outlook. In 2025, Amadeus Fire Group showed a good level of resilience within a persistently challenging economic environment. Nevertheless, we found ourselves on a significantly lower level of profitability compared to our historic earnings level. The sentiment within the companies is even worse than the actual situation. Companies' willingness to invest worsened throughout the year 25. Expansion plans were put on hold and decisions also on staff recruiting activities were made with massive cautions, or staff was cut in view of the continuing uncertainty regarding future economic developments. Challenges such as demographic change, slow progress in digitalization, and the aftermath of the energy price crisis, as well as the deteriorating consumer confidence, played a central role. The long-standing phase of economic stagnation in Germany is escalating into a profound growth crisis in which companies lack any sense of optimism. The minimal growth in real gross domestic product GDP of 0.2% in Germany fell far short of expectations. The unemployment rate in Germany increased already to 6.5% in February. This is representing over 3 million people unemployed. Added to this are multilateral trade barriers throughout the world. Global uncertainties and international trade conflicts are leading to geopolitical tensions, which are currently being played out in open armed conflicts. The war in the Middle East is starting to burn the global economy once again. The sharply negative revenue trend in 2025 financial year across both segments, training and staffing of the group, the one-off restructuring costs we had of 6 million, and forward-looking investments in digital transformation of the Amadeus Fire Group resulted in a decline in operating gross profits and disproportionately large drop in operating EBITA in 2025. Revenues of 364 million is 16.8% below the previous year figures of 437 million. Revenues ended within the forecast range of 355 to 385 million. Operating gross profit of 186 million resulted in an operating gross profit margin of 51.4%, following 54.2% in previous year, which remains significantly above the market average. Operating EBITA in 2025 was therefore down to 14 million from 56 million in the previous year. Operating profit, excluding the one-off effect of restructuring costs, ultimately stood at 20 million, and thus the 40 million or the 20 million respectively ended at the low end of the originally forecast range of 15 to 25 million for fiscal year 25, or the 20 million after restructuring in the middle of that corridor. At year end, we were able to complete 2 acquisitions, 2 technology and AI-driven buy and build cases in the B2B corporate learning environment. The consolidated net loss for financial year 25 attributable to shareholders of Amadeus Fire AG amounts to a negative 2.2 million. Basic earnings per share thus amount to minus 44 cents following 6 euros in previous year. Following this negative result and in line with the current dividend policy, the management board and the supervisory board will propose to the AGM that in view of the negative result achieved and the payout policy as part of earnings, no dividend will be paid out, and the retained earnings of Amadeus Fire AG will be carried forward to new accounts. The economic outlook for Germany remains weak overall for 26 and is characterized by uncertainty and limited momentum. A sustained and broad-based economic recovery cannot currently be anticipated. Furthermore, productivity growth in Germany remains comparatively low. Delays in the digital transformation, a high regulatory burden, and investment barriers in key infrastructure sectors are holding back efficiency gains in the economy and in public administration. These uncertainties are complicating economic planning and influencing invest activities and trade decisions across national borders of corporations. So our assumption is a weak German market throughout the year 2026. The staffing market in the white-collar sector continues to be significantly influenced by weak macro conditions and marked reluctance to make hiring decisions. Companies are proceeding cautiously when filling new or vacant positions and are frequently postponing staffing decisions. At the same time, candidates' willingness to change jobs remains limited in the face of economic uncertainty. Against this backdrop, demand for skilled temporary staff remains subdued. Increased costs resulting from collective wage agreements and regulatory frameworks have noticeably reduced the appeal of temporary staffing solutions for many companies. Flexible employment models are still being used, but in a far more selective manner than in previous years. Accordingly, revival in demand for skilled temporary staff is not foreseeable in the short term. Overall, no relevant improvement in the market situation is anticipated for the coming fiscal year. Rather, the overall trend is likely to be similar than in the year 25. Basically, the same accounts for permanent placement and a little bit more of resilience in market-wise in interim management. Whereas the training segment expects an overall more positive performance in 2026. A key strategic focus will be the consistent AI-first orientation. The aim is to systematically expand the service portfolio to include AI-related training programs and to tap into new target groups. The thematic development will be driven beyond traditional commercial and IT trainings. The acquisitions of Masterplan and EduBytes in 25 strengthened the technology-driven training offering and the expansion of the corporate client business. The integration of scalable software as a service platforms with recurring revenue structures enables access to new customer segments. The development of individual learning pathways and the systematic use of AI-supported learning and knowledge formats. In addition, a slight increase in participant numbers and revenues are expected in the private B2C business. New enrollments in publicly funded training programs, the B2G market, are expected to show a positive trend throughout the year compared to 25. Following the downward trend in the number of training participants and the corresponding decline in revenues in the previous year, the start of the year will be clearly below previous year levels. Current enrollments and those expected later in the year should generate positive momentum in revenue growth, leading to a further significant expansion in business volume by the start of 2027. So it is a growth path we foresee for 2 years. Even against the backdrop of an assumed consistently weak market environment in 26, the aim is to stabilize group revenues. The revenue growth target for 2026 is in the range of 0 to 8%, so between 362 and 394 million. A stabilized revenue situation and effective cost management are leading to increased earnings expectations. The target for operating EBITA for the 26 financial year is in the range of 20 to 31 million. This corresponds to significant growth rates of approximately 46 to 130%. Based on these expectations, the operating EBITA margin would be around 5 to 9%. The earnings target is first step on the path back to significantly higher profit margins and the level of profitability seen in previous years. Over the course of the year, a continuous quarter-on-quarter improvement in earnings compared with the corresponding quarters of the previous year is expected, following a start to 26 that is anticipated to be below the previous year level, in line with the declining business performance throughout the year 25. The personal service segment expects revenue of 190 to 210 million, with an operating EBITA of 9 to 16 million. This corresponds to revenue development in the range of -9% to +1%. Uncertainty is reflected in a wider revenue and earnings range for 26. Following the decline in revenues 25, revenue in 26 is initially expected to be significantly lower than the previous year level, and at the end of the year, slightly above previous year level. The overall trend in earnings is expected to be similar. Potential decline in revenues should be offset by some cost savings. The expected operating A margin is projected to be around 4 to 8%. This outlook is given under the assumption of a continuous weak environment in 26. An economic recovery starting earlier than expected would offer upside potential in terms of earnings and revenues. The training segment is expected with a significant increase in revenues to 172 to 184 million. This would correspond to revenue growth of 10 to 18%. Adjusted for growth effects from acquisitions, this corresponds to middle single-digit growth targets for the existing business. The forecasted operating EBITA stands at 11 to 50 million. This represents a significant increase compared to the operating EBITA for 2025 of just around 1 million, which was, however, significantly impacted by around 6 million restructuring costs. But also adjusted for this effect, it is targeted to somewhat double the earnings level in training. So to summarize what I just said regarding 25 and 26, we are foreseeing, despite the very weak environment in 26, which we forecast, a significant improvement in our business, especially in earnings, driven by the training segment. So in the end, in 26, we should be back on the path to the used profitability levels of the Amadeus Fire Group. 26 as a step in between, already with significant positive results and significant earnings per share back again, preparing, starting at the low point in 26, preparing to regain ground and to enter then an even more successful year 27. Thank you very much.
Thank you, Robert, for guiding us through Amadeus Fire Group's full year 2025 financial results and the outlook for 2026. For investors, the key question now is whether efficiency measures, restructuring progress, and the integration of recently acquired digital training platforms can support a meaningful recovery in profitability as market conditions improve. You can find this video and many more management presentations from listed companies on Seat 11A. Thanks for watching, and we look forward to welcoming you back soon on Seat 11A.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.